Broadcasting live from the Subaru of Gwinnett studios in Atlanta, it's time for On the Money, presented by Embassy National Bank. Now, here's your host, Joe Moss.
Hi, everybody. Welcome to this week's edition of On the Money, the #1 small business podcast on Business Radio X. I like saying that, Mike. The show is sponsored by Embassy National Bank, and we like to discuss topics that will help the small business be a lot more successful. We do this because Embassy is very proud of how we help small business. I am your host, Joe Moss, and president of Embassy National Bank, and we come to you live from the global broadcast studios of Subaru of Gwinnett. It's an incredible facility. So today we are going to talk about something that's, boy, it's complicated. Probably going to get worse, too. But we're going to talk about the Affordable Care Act and the impact on premiums, your medical protection. And today we've got a return show with Mr. Keith Nabb, who is president and owner of Affordable Medicare Solutions. So, Keith, welcome to the show.
Thanks for having me today, Joe.
And talk about your particular agency and how it's different.
Well, we are exceptionally different because we do have myself and 11 employees, and we have an education focus. A lot of agents out there are worried about enrolling people into each healthcare plan or Medicare plan and the different services there. We're actually driven by teaching. I actually teach classes, about 60 classes a year, to all different types of people on healthcare reform and Medicare reform and continuing education credits and whatnot. So we're education focused. And then, of course, people then come to us for their enrollments.
And our show is about small business, but there's a lot of stuff coming down that is directly and indirectly is going to affect the small business owner. And I've heard bits and pieces of it. Our most of our board are small business owners, and they're being affected by it. So now, when you walked in the door, you mentioned it's Medicare season. That's why I'm late. Well, you were just a little bit late, but it's Medicare season, and what do you mean by that?
Well, the government has imposed enrollment periods on both health insurance and Medicare insurance. So if you're on a small group plan, it's different because you can establish your own time frame for that. But if you're buying individual or family health insurance, it is November 1st to January 31st. This year. It changes year by year. But under Medicare, it has remained the same for the last few years, where it's October 15th to December 7th. Eventually, under the law, both of those periods are supposed to be identical, but right now they don't match up because of various government problems, but they eventually will be just October 15th to December 7th for all enrollments. But right now that applies to Medicare.
And if you miss an enrollment, you got to wait till next year?
Unless you have a special circumstance.
Really?
Yep.
Okay.
Such as getting married, moving, having a baby. Maybe there's special reasons. Lost a job.
Kind of like missing jury duty, right?
You can come up with excuses, yes.
Right. Well, what's coming down the pike on Medicare? You were talking about some fairly increased premiums and how they're going to fund that, and what the impact that might be on the deficit, on the state treasury. So why don't you talk about that a little bit?
Sure, and also it impacts business owners themselves, because Medicare has some weird rules on premiums. Medicare Part A is the hospital portion of Medicare, and it is generally free. But the problem is Medicare Outpatient Services Part B has a premium, and that premium has been running $104.90 per month per person on average, unless you've had high past income. So a lot of small business owners will exceed the income limits and have to pay a penalty for that premium, but it's assessed 2 years later. It's a retroactive tax. So I know that sounds confusing, but this generally affects my small business owners. And I'll explain that a little bit further. But for right now, what's going on is that Medicare has to raise that premium for everybody. And they can't raise it for everybody due to some federal rules. So there's a lot of misinformation going on out there. A lot of people very confused. And Medicare's premium from $104.90 is scheduled to go to $159. That is an enormous, biggest jump we've ever seen, 52%.
So the person that really can't afford it.
But they are protected. So this is where the confusion comes in. If you're already taking Social Security, you're under what is called a safe harbor provision, and they're not allowed to raise your Medicare premium unless they're also giving you a raise on your paycheck, your Social Security check. But a lot of people, especially small business owners that are continuing to work, delay taking their Social Security. And they might delay it till 68 or 69 or something. And so they're not protected by that safe harbor provision. They may be on Medicare. Their premium's going to go up because they're not taking Social Security. And there's not a way to avoid that.
That's an election you have to make when you choose Medicare. When you decide to join Medicare, that's an election you have to take.
That's correct. If you're not taking Social Security, then you have to elect to take Medicare when you turn 65.
Okay.
You have to.
So it's kind of like you've got to take both at the same time. It sounds like.
Well, no, you can delay Social Security and start Medicare early,
but you'll be affected by all the premium increases.
That's correct.
And it sounds like that they're going to be the ones. A smaller group of people will be the ones paying for all the premium increase.
That's correct, 30%. So that's going to at least happen for a year. Because if in 2017 they do end up giving everybody a Social Security check increase, which this year they're not going to, but if they do a year later, they give everybody a 2% increase or something, then they'll re-average and everybody will have to pay a higher premium. It may not be $159, it may be $130 for everybody. But that's when they'll play catch up. But during this 1 year where they didn't give a Social Security increase, it's going to be painful for that small 30% of the people that are going to have to pay this.
Now, sure. What about? Now, you mentioned before the show the cost of this is estimated to be about $6 billion.
In Congress, Speaker Pelosi and Speaker Boehner are negotiating to try to alleviate this problem because we're heading into an election year, and no one wants to do this to people before an election year. It's a very bad. Politically,
especially the seniors,
and they vote and take their friends with them to vote. So they, as a crowd, you don't want to upset at all. And there's a lot of demagoguery. There's a lot of chain emails and things that go around that mislead people. But if they can fix it, it'll cost $6.5 billion to fix this. The problem is we're at our debt limit right now, and you can't just go spend more money. Thank goodness. So they're going to have to cut elsewhere. And that's the negotiation. Where are we going to cut in order to fund $6.5 billion to alleviate this election year problem of Medicare,
or just raise the debt limit?
Yeah, well, we've been at how many months now?
Right,
70 months or something, or 70 weeks, excuse me, at the debt limit. Yeah.
That'll probably come. Now, what are seniors doing now about drug coverage? Because that's another large expenditure.
It's huge, and the drug costs have been going up, and this is where seniors are upset, is that they're not getting a raise on their Social Security check, yet we're seeing inflation in drug cost, we're seeing inflation in the Medicare premiums and all these things, but they're saying that seniors aren't experiencing inflation. We know that they are. So Medicare drug costs are especially bad for seniors, especially if you're in the 20% that hit what is called the donut hole. So to make it simple, everybody that's on Medicare that gets a drug program gets about $3,000 every year to spend on drugs. And if you run out of that money, you fall into a zone called the donut hole or the coverage gap. So my job is to help people avoid that so that they don't ever feel that pain. And we do a lot of reviews this time of year to make sure people aren't going to be surprised next year about their drug costs and move them to the right plans. This is when you can do that, October 15th to December 7th.
And you mentioned that at $3,310, you fall into the donut hole, and you get out of the donut hole at $4,850. It looks like
those numbers don't quite. What you said is correct, but the way that it works is you get that $3,310 to spend on drugs. Then after that point, there's a different calculation of another $4,850. That is the calculation of the donut hole period. It is complicated. It's the only drug plan in America that is built this way. It's very strange, but it is one reason why it's come in under budget every year for the last 10 years.
So if I'm a senior, how am I supposed to explain all this? How am I supposed to understand this?
Well, you need to find a person that actually will sit and teach you about it. So we actually give classes. We actually have materials we can email that actually explain it so that they're not trying to figure this out. The better thing to do is just not ever hit the donut hole. And the way you do that is to review your plans, just like any health insurance or auto insurance. Review your plans to make sure you're not overspending or putting yourself in a bad position. Because if you don't do this and you find out in January that you're in a bad position, you can't fix it. December 7th was the cutoff. So you need to fix it now so you don't get ugly surprises in 2016.
You've heard it from the experts. So when the discussion starts coming around, oh, they're trying to take my Medicare away. That's not what they're doing. They're just trying to figure out who's going to pay for all the increases, I would guess, right?
And it's scheduled. It's a calculation that happens automatically. But the problem is then it gets complicated with these other provisions that say you can't do certain things. So the government's in conflict with itself, and it makes a lot of problems. And we see this all the time in the tax code.
And no one's trying to take Medicare away, everybody. So it's just complicated, and they'll work through it. And if you're already taking Social Security, it sounds like you're going to be protected. But those of you who are not, expect to be paying another $50 a month, I guess, for another couple of years.
At least a year.
Yeah. Okay. Well, let's leave that on the side.
Okay.
And let's talk about where we are with the Affordable Care Act as it relates to the small business owner. You have a handout here that you handed me, 5 important points on health care reform. Mm-hmm. You want to walk me through this,
Sure.
or how do you want to address this? Because we need to talk about where it all stands with the small business owner.
So it's really important, especially on small business owners. They've been getting some conflicting information on how to handle, let's say we're under 20 employees and you're trying to deal with health insurance and get it to your employees at the best case possible. So there's a couple of things that are happening. And there was a law that changed on July 1st, an administrative rule that heavily, and I'm going to say it again, heavily penalizes a small business owner if they are paying for employees' private health insurance. If you do not have a group health insurance plan and you are giving your employees, here, Bob, $200 a month to go buy your own health insurance, and you're putting that in writing and you're telling him that you are afoul of the law or of this rule, and it could be a $100 a day penalty per employee. So you have to be very careful that you're doing this correctly. If you have a small group plan, you're fine. But so many small business owners over these last 2 years have switched from doing small group insurance and instead are encouraging their people to buy individual policies, which is great. You just have to be careful that you're not directly paying for that, and you're not giving.
Well, wait
them.
a minute. I thought that was the intent, was to try to help the small business owner to deflect these people over into the various exchanges.
Yes. And the problem is that all the large group insurers got a huge panic that they were going to bleed off all of their group clients onto individual policies. We started seeing that happen. So an administrator decided to put a rule in to try to stem this tide. There's actually talk in Congress, and the National Federation of Independent Business is lobbying to get rid of this new $100 a day penalty.
So as a small business owner, and the cut is 20 employees or less, or is it 50? It's 50.
50, yeah.
All right, so if you're 50 or less, and you've been directing people to go to the exchange and I'll pay it for you, because that's kind of what everybody wanted to do.
You can.
Now you need to shift back and say, maybe I need to offer a group policy.
No, so let me tell you the way to do it. It's okay to do it to encourage your employees to go get insurance through the exchange, and I'll explain why. But you just can't identify money that you're giving them as that money has to be spent on that health insurance. For example, if you just give everybody a $200 a month raise and just say, congratulations, you got a $200 a month raise, I'm not providing you with insurance. Hey, there's a great avenue to go get insurance through the exchange. That's okay.
And you're on your own to do that.
And you're on your own. That's okay. But if you give them on their paycheck and it says this is your health reimbursement, that's illegal. If you pay it directly for them, don't even give it to them, just pay it to the insurance company on their behalf, that's illegal too right now. So that all changed July 1. That's a big deal.
That seems to me completely in reverse of what they were trying to accomplish with the small business owner, but that's my own opinion.
Well, but to see, the other problem is that people that are on group insurance, let me explain how these subsidies work. If you're on a group insurance plan and you're paying for your employee to have free insurance,
okay,
doing a great job as a business owner, saying, I'm going to take care of you and I'm going to give you free
I'm
coverage.
going to get a group coverage.
And I'm going to give the employee free coverage.
And I'm going to pay your premium.
But I'm not going to pay for the spouse and the children.
Right.
Now, spouse and children cost $700-800 a month to be on this plan. And the employee's like, shoot, I don't want to pay that. I'm going to go to the exchange, the healthcare.gov, and I'm going to buy my spouse and child a low-cost plan and get a subsidy. You can't do that. If you have access to group insurance, the dependents, if they have access,
you cannot go to the exchange.
Whether or not they participate in the group plan or not, they can't go get a subsidy unless in a very specific circumstance. But in 99.9% of the time, they cannot do that, okay?
But then there's a penalty if they don't get insurance.
That's correct. That's called the family glitch in the law. And it is very strange, and that's where a huge number of people are getting these subsidies charged back to them at tax time, and it's causing a lot of angst and pain, financial pain.
All right. Well, you're listening to On the Money, and we're getting into the Affordable Care Act with Mr. Keith Nabb. This is Joe Moss. Show brought to you by Embassy National Bank. So, all right, let's go 50 and under. Then it sounds to me like the best thing to do is say, I'm going to give you a raise, go take care of yourself.
Oftentimes that is awesome, especially for lower income employees, because then they can go get all these rich subsidies and tax credits. And so oftentimes offering group insurance prevents the employee from getting his family or her family a low-cost insurance.
The problem that we had was that people were being given money and they opted not to go get insurance with it.
Yeah, we're damned if we do and damned if we don't.
So,
sometimes.
but those people would still be up to a some type of a penalty at tax time if they don't have insurance.
That is correct.
Now, has that penalty gone up?
Yes, it has. Yep.
Okay, so what is that penalty
2%.
now? 2%
Of income.
Okay,
That's right.
So that's more than what it was. It used to be like $300.
Well, no, it started at a certain level. It was 1% minimum was on a family was $295, but now it's 2%. So if you're making $50,000, it's $1,000 penalty.
So now we're into the zone where you can't just sit back and take the penalty. You got to go do something. Take the $200 and go buy the policies, right?
If the employees don't go buy themselves insurance, then yes, they're shooting themselves in the foot.
Yeah. All right. Well, let's talk about the policy itself. Is there still a one-size-fit-all policy?
No, there's a lot of choice on and off the exchange. So let me make sure that everybody understands the definition. If you do not need these tax credits, definitely stay away from healthcare.gov. Don't go there. If you don't need them, don't go there because it creates a huge amount of bureaucracy in your life that you won't realize till afterwards. If you do need a subsidy to drive down the cost of your insurance or your family's insurance, then we go with our clients to the healthcare.gov. We get them qualified on those subsidies, and then there's a large number of plans they can choose from, but there's a huge quality difference between the plans, and so they're not all built the same. They all have the same essential benefits, but one might have a teeny tiny doctor network, one might have a national network, one might have really good drug plan formulary for a list of drugs, and the other one might have a terrible formulary list of drugs. There's a lot of quality differences.
And you got to really read through the detail.
Or deal with a professional that doesn't charge you to do this. We don't charge our clients to do this. We handle all this for them.
But for example, if you're if you're an older couple, don't have kids at home, is there a policy that doesn't cover certain things, or all the coverages are the same, right?
Yep. You're 55 years old. You're going to get maternity coverage whether you want it or not.
Okay, so that's still the same.
Yep, essential benefits. They're all.
Is there any discussion about changing that? I mean, they're
sure.
letting you pick all these other things. Why not that?
Because they were trying to create a pooling effect, and there are talk. Representative Tom Price and other ones have talked about doing other options like that. But as far as in the law itself, there is no talk about that.
Okay. All right. Let's go to the 50 and 51 and over employee. 51 to 100. Is that the next break?
Mm-hmm.
What's going on with them?
So there's been some changes recently in the definitions on those plan types of what's considered small group has been changing. So it would be a lot to go over some of that. We have all that information. If someone has 51 to 100 or 100 over, then we can definitely give them the information on that. But there are penalties that can accumulate in two different ways. One, if you don't provide insurance, you can have a huge penalty per employee. If you provide insurance and it's not affordable, if the employee's cost is more than 8.5% of their income, then they can leave your plan and go get these subsidies, and you would get a huge, about a $3,000 per employee per year penalty for the ones that do that. So there's an incentive to make your employee costs very affordable and to also provide insurance.
Can you do that through reimbursement?
Not to buy individual insurance?
No, for the employee. Let's say that their policy that I'm providing them, their cost is more than 8% of their compensation.
Their portion.
Can I change their portion so it fits under? It's just
Yes.
going to cost me more money.
That's right. That's exactly what you need to do.
Okay.
So you need to definitely look at your employee salaries and make sure you don't have anyone that falls within that target, make sure that you definitely keep your employee costs under 8.5% of their amount.
Okay. Now, before, let me stop because I should have stopped you before. But when you said a company that doesn't need the tax subsidies, explain that to us.
Okay, I was talking about an individual not needing the tax subsidies.
Okay. Not the company. Right.
So the companies had a separate program called a shop exchange where you can go through the healthcare.gov for small businesses. It's extraordinarily difficult, extraordinarily painful. It's bureaucratic. It's been an enormous failure. Hardly anybody has done that. I have one client that has done that, and even they wish they hadn't done it. It was designed by the government as a way for small businesses to be able to access tax credits, to be able to get the business to get tax credits for providing insurance to the employees. And it has been a miserable failure.
Okay, so we did the 51 to 100, now 101 employees and over.
They have to provide insurance.
They have to provide it. Now, are there limits on the amount it can cost the employee or anything like it is on the 8%?
The same rules apply.
Okay.
Same rules.
So what's the difference between 51 to 100 and a 101 and above?
I want to make sure that I state this correctly. So at the 51 and above is where you have to start providing the coverages, okay?
Okay.
The definitions of small group has changed or was delayed on some changes for the definitions of what that is, but for the tax penalties, they start at the 50 employees.
Okay.
The requirements to provide the insurance.
Okay. So the group policies that are being offered for the small business now, they have to go buy it and have to provide it. Is that a one-size-fits-all policy? Is there any way to adjust the cost of that?
Lots of ways. There's lots of creativity going on.
And do I have to charge the employee for that, or can I reimburse the employee for that?
No, you would. The ideal situation is to pay 100% of the employee's cost, or to make sure you stay within charging them less than 8.5% of their income.
Okay, so let's say I do that, but I still making them pay for their wife and their children.
It's your option.
And I could go ahead and pay that for them.
You could, sure.
But I don't have to.
You're not required.
But as the individual says, okay, you're expensive. I got to go over here and do something. So they can go buy that coverage from the exchange.
They can, but they cannot use tax credits.
Okay.
Because if you have access to group insurance, you are disallowed from getting tax credits unless you fall into that circumstance where the employee's cost was more than 8.5% of their income.
Okay. And then I can elect not to insure my wife and children, but then I'm up to against the penalty, right?
That's right. Yes,
and that's a big penalty.
That's correct.
Okay. Wow. So the only way to handle all this stuff is to give you a call, it sounds like.
Give us a call. There's oftentimes very simple solutions. It sounds complicated, but you have to look at the subset that you fall within. If you say, look, I'm at 10 employees, these are the goals that I'm trying to do. I've got high-income earners or I've got low-income earners. We can quickly then figure out which would be the right target for you, because this discussion we're having can go all over the place, but the discussion for that employer might be very, very direct and solved very quickly because we look at their specific circumstance. All
right, so if in the over 100 employees and I'm only pay for the employees' policy, and there's still going to be a situation where they got to go find affordable insurance for their family, and a lot of them are going into affordable care. Correct?
That's right. Well, that's where you have to. All policies now are Affordable Care Act policies. The option is whether or not you pay full price or seek tax credits to reduce your price.
But you're in a plan you can't get.
If you have access to the group plan, then forget it. You cannot go get those subsidies unless you're in a very specific circumstance.
Well, what is the impact? What do you there was a whole lot of talk beforehand about people are going to outsource, people are going to stop hiring people are going to go part-time. There was all this horror stories going on about what was going to happen. What have you specifically seen a business, say, with more than 50 employees do?
They've been now at this point are now doing the group insurance. And there, some of them,
because they have to.
Right, but some of the phenomenon that we saw originally, which was moving people to part-time and trying to manipulate and do those things, seems to have calmed down, and the stats are now that that's really not happening too much.
So they're saying if I'm over 50 employees, and boom, I got to go get a group policy.
I got to get this thing done, yep.
And if it's costing more than 8.5%, I'm going to have to pony up for it.
Or face risk of your employees leaving and going and and doing something and really hurting you.
Okay. Now the folks that are at 50 and under, like our little bank is 20 employees, but we've got a group policy.
Great.
But we pay for the employee, but they're on their own to go cover the wife and the children.
Mm-hmm. Okay.
Do I have an obligation to see how that's being handled?
You definitely want to warn your employees that if they're going to get subsidies for their spouse and children, that they could be at huge jeopardy of having all that charged back to them when they file their taxes.
Because they're under a group plan.
They have access to the group plan.
And that group plan may be more expensive than the Affordable Care Act. They just need to look at all of it, correct?
But the problem is people were encouraging the families, dependents, to go get subsidized insurance, but it's called the family glitch in the law, and they haven't fixed it. And that is an IRS rule that you can't go get subsidies if you have access to group insurance. So it has been very painful for people at tax time.
Now, can I reimburse part of the family coverage to the employee?
You can pay for it.
I could pay.
Not on. Are they talking participating on your group insurance?
Yes.
Yes. Then you can say I'll pay 25% of the cost of the dependents coverage. You can do that and help out your employees all day long. You could pay for 50% or 100%.
So what we could do is figure out how much does it cost on the exchange, and if people are not they're not getting coverage and they're at risk, we could say, well, look, we'll knock ours down to equal to what the exchange would be.
That would be probably a difficult exercise, but in the spirit, yes, you could. Well,
generally,
yeah,
right?
Generally,
yeah. Okay.
Yeah. Mm-hmm.
Well, this is a brain teaser today, folks. But I'm glad we're talking through it. Keith, this is really good. You're listening to On the Money. We're talking about healthcare insurance, and Keith is the owner of Affordable Medicare Solutions,
yes.
And he runs He'll find policies for people and get you covered, but what I'm hearing more and more is that Keith has really taken the time to get people educated, both small business and as well as the individual in terms of what to do.
That's correct.
Are companies hiring you to help the employee?
So if an employer does not provide insurance, and they're trying to get rid of group insurance, and they want us to help the employees to sign up and to find the best way, the smartest way to buy their insurance, absolutely. We'll sit down and one by one for each employee and customize their situation. And oftentimes that can be much better for the employees, especially on the lower income scales, because they're eligible for so much help. 50% of people qualify for this help. And so a lot of them just don't know how to do it.
Well, now some of the group plans that are out there, and for the 50 and under, I guess they are more expensive than the Affordable Care Act.
It's becoming very similar.
Very similar.
Yeah.
Okay. So
unless you get subsidies, if you're just talking buying regular premium without any tax credits, they're getting to be almost identical.
So what you have to do is kind of look through your employee base to see if they're generally eligible for subsidy. If they are, you want to reimburse them. But if they're not, you really want to get people under a group plan, I would think.
Yeah, my higher income places, they're generally doing group insurance for sure. When you're talking people that are at the the lower income levels, $20 an hour and less, then it's usually better that they go get those tax credits, and it's better for the employer, better for the employee. A lot of them, their kids are on Peach Care anyway, which is a state programs for the kids, state and federal programs for the kids. So there's a lot of reasons why on the lower incomes that they have a lot more help than the higher incomes do.
Now, what do we have to look forward to? In terms of let me back up. We'll leave that question for just a minute.
It's a good question.
What if I'm 48 employees
Mm-hmm.
and I really want to hire another 5 people, how do I go about doing that?
Well, it's definitely going to have to factor into your budgeting. Absolutely. If you're not providing group insurance at 48, I'd be surprised. But if you weren't, and that 5 then brings you into requiring you to provide group insurance, that's a huge expense you're going to have to budget for. I had a gentleman with 112 employees, and they weren't providing insurance for them, and all of their corporate profit was eaten up by providing insurance.
Well, if you're at 112, you have to provide
I know.
insurance.
I mean, but it was $250,000 that of their corporate profit was what they had the year prior. They had to spend that the next year on health insurance.
Are people going the part-time route? Does that help if you go the part-time route?
There's a calculation on there, and it's called a full-time equivalent, FTE.
Yeah.
So normally FTE means full-time employee, but there's a thing called full-time equivalent that balances out using the part-timers versus full-timers that still accounts for that, so that it prevents people from beating the system.
So if your full-time equivalent is over a certain level, then
you're going to get penalized if you don't do it. Yeah.
You're going to get penalized.
That's built into the law.
Okay. Wow. Okay. All right, let's go to that next question. What do I, the small business owner or manager, have to look forward to under all this?
So my opinion and what we're seeing happening is you have to understand the markets that group insurance covers 150 million people in America. That's half of America. Medicaid covers 20% of America, which is 60 million people, and Medicare is rapidly approaching 60 million. We're at 55 or so million right now, but Medicare will be at about 85 or 90 million when all the baby boomers come in. My point that I'm making is that half of America is covered by group insurance and half is covered by Medicare, Medicaid, veterans benefits, children's health insurance, all of these programs. What's stuck in the middle is individual health insurance. The market on that is 15 million people. And when the Congressional Budget Office did their projections under the Affordable Care Act, they said that market might go to 20 million people. Well, we were talking about 54 million people being uninsured. So what Congressional Budget Office said, CBO, they said was the Affordable Care Act was going to have its major impact in the uninsured rate by expanding Medicaid. And that's what's happened. All the news you hear about the individual health market is just noise, because 75% of all the policies sold on the exchanges and for these plans are previously insured people that lost their coverage due to the law. Health and Human Services has made this very clear. 75% of policies are people that were not uninsured before. They were insured. My family is a perfect example. So we've actually ended up with about 2 million people that got...
And those were people that were probably with a company that had less than 50 people, right?
Well, a lot of them were small business owners.
Yeah.
Myself, I'm a good example. I had my own plan, and it got canceled. Then I had to go buy a new plan. Well, they counted that as a success that I went
new.
I had to go buy. But then I also had to buy one of my daughters a plan. They counted that as a success. So there's a lot of false counting going on, and the net increase of insured people is actually between 1.5 million and 2 million people. The ugly truth is, of the people going to get new insurance that have never had it before, and a lot of them are going because it's zero premium or very low due to these tax credits, are dropping off at enormous rates. Hawaii had 80% drop off. I've had friends in this business that targeted that group that have had 70% drop off.
Who've elected not to buy insurance.
No, they bought it, and then it didn't continue with it. It was $5 a month, and they didn't pay the $5 a month. It was $20 a month, and they didn't pay it. Or they didn't file their taxes in order to keep that subsidy going, and the IRS took away the subsidy. It is a very bad problem. We're seeing huge numbers dropping off because of that.
But the next year, they're going to file their tax return. They're going to end up with a big penalty.
No, a lot of them are under the federal poverty limit or so low anyway. The IRS is not going to get blood from a stone. They're not going to get that penalty from them anyway.
Okay.
And so it was the higher income people that are definitely getting that money charged back to them, the people that are actually earning.
So the people that it was designed to help, it's not really helping.
That's been the issue, except in the states that increased Medicaid. So we had 28 states, or close to 30 total, are increasing Medicaid, and that's where all the success was predicted to happen, and that's where the uninsured rate has been dropping. So the point is that the expansion of Medicaid is actually what the Congressional Budget Office said would work. That is what's working. the individual health market is actually not increasing by hardly at all. Maybe 10% it's increased. It's been a big wreck to it, and I expect, be a huge change to that individual health market in 3 or 4 years, because we're already starting to see my personal plan went up 22%. We're seeing the major plans here in Georgia are looking at 15 to 20% increases next year. Those losses that the plans had that kept them from raising their rates were protected under a special provision in the law called a risk corridor. That has ended. That money ran out super fast. It was $5 billion. It ran out in 2 years. And the Republicans are not going to fund it again, and I agree that they shouldn't. And it's going to expose that this individual health market is going to start getting very, very expensive, which means that fewer and fewer people are going to participate because they're going to say, forget it. I was $200 a month 2 years ago, and now I'm $400 a month, and people are going to spin out the healthy, and it's going to create what is called a death spiral.
And those people are going to try to get on Medicaid, but a lot of them may not even get on Medicaid.
No, a lot of people are just going to say, I can't afford it, and they're just going to pay the penalty, and that's not the intent of the law. So what will end up happening is not that market will collapse. I have a feeling in 3 or 4 years the government's going to have to convert it again. They're not going to mess with group insurance anymore. They're not going to mess with Medicaid and Medicare anymore. It's just that 5% of America that's on this individual health is going to have to transform again in 3 or 4 years. So it's going to be fun.
And I think the only way they're going to be able to do that is offer more boundaries to or less. They're going to have to let insurers provide policies that protect the needs of that individual, not a group.
That is one approach, and that's the ideal approach to me, the consumer-driven approach.
Sure.
Right? What is more likely to happen, and this is my own personal opinion, the government has not said this yet, but the more likely thing is they're going to make it into something similar to Medicare, where Medicare is delivered through private companies called Medicare Advantage. Medicare Advantage is privatized Medicare. It works for people age 65 and up. 17 million seniors do it, and the companies are making good money at it. The reason that Aetna is buying Humana, the reason that Blue Cross is buying Cigna, is because of their Medicare Advantage successes.
This sounds like this is a big win for the insurance industry more than anybody.
It will be. All of this has been corporatism, and it is creating guaranteed markets for them, and I understand that, but I have a feeling they're going to raise their hand and say we can fix this in 3 or 4 years by changing it to those type of model. Ideal would be a consumer-driven model such as health savings accounts and other things like that, but I don't see that happening.
Well, we're at the end here, and I just feel like we've kind of just got started, but I think you hit a lot of key points, and that is what happens with the business owner that's 50 employees and less, and 50 to 100 and 100 and over. You've got to get the group policy. You got to watch people over 8.5%. Beware to the family that's going out to the exchange, because if you're under a group plan, you don't get the subsidy. So you really need to evaluate that versus what the employer cost is. I would say to the employer, look at what you're charging for the family, and maybe there's a way you can help with that so that they don't go to the exchange. So there's a lot of options in here.
The biggest point is you better have a professional helping you that knows what they're doing, and there's a lot of great resources, and you better not try to handle this and guesswork, because the errors are very painful.
And yeah, especially for the employee who's looking over here at the family, what do I do? And I guess the easy answer would be, well, I'm just going to go to the exchange. And you fill it all out, you get subsidized, and then what you're saying is next year, boom, guess what? You got to pay it all back.
That's been what has been happening, and unfortunately, major radio hosts that are national radio hosts that are based out of Atlanta actually said that wrong 2 years ago and encouraged people to do that, and it created a huge mess.
Okay. Well, I just want to point out something to everybody that I've noticed, and for those of you who are watching the video, Keith is an encyclopedia of this stuff, and he was looking down at notes, but none of what he was talking about was on his note page. All of it was coming rambling out of his brain. So, Keith, you should be complimented for your incredible depth of knowledge of this whole complicated process that we're involved in?
Well, I think practice makes perfect. I teach these classes, and that helps me. And I may have made some errors in some phrasing, so I want to make sure that anyone knows that if they think something I've said is incorrect, they can contact me. It's my website is affordablemedicaresolutions.com, and you can just send it to Keith at affordablemedicaresolutions.com. Hopefully I haven't said anything incorrect, because I teach these classes, and so this is every week I'm having to go over this type of information.
And you're just not Georgia-based. I mean, do you offer this stuff video, online, everything?
No, this is Georgia-based because...
By law?
No.
Oh.
I have friends that do multiple states, and there's no way you can do a good job, to me, doing this multiple states, because it is so intensive for each state, because each state's exchange market, each state's group market, everything is state-based. On this, and I don't see how people do multiple states, to be honest.
Well, and everybody said that this was going to eliminate states' rights. It sounds like the states are right back in it again.
It has eliminated a lot of states' rights.
Right.
It's usurped a lot of states' rights.
Well, Keith, it's been very, very helpful, and I it's good to know that there's a resource out there for people, because and based on our conversations that we've had, I'd highly recommend that people pick up the phone and call you, so that they don't end up doing something wrong. Gosh, it used to be so easy.
Well, if they have parents, even if they're doing their own thing and they're working somewhere and they have their business going, but they have their mom or dad, there's a lot of sandwich people that are taking care of their parents and their kids at the same time, and I could take that off their back to help them with their parents, for sure.
Okay. All right. Well, Keith, thank you so much for being with us, and that concludes our show today. This has been On the Money, and we are the #1 small business show on Business Radio X, and I think you can tell why by this last interview, because we like to get into the technical and get people some help, not just try to sell them. Get people some help. Presented by Embassy National Bank. Our Twitter is on_the_money and then the number 1. And you can listen to any of our shows at onthemoney.businessradiox.com. We are available free on iTunes if you want to download us. And we are also now on YouTube, which is actually fun. I mean, I enjoyed watching it. It's kind of hard to sit through 40 minutes of it, but I think you get a lot more flavor from watching the video and the expressions. But and the mic, the cameras are hidden, so we have no idea, and it makes us be more natural. I like that a lot. But anyway, you can watch us on YouTube at Business Radio X Gwinnett Studio channel. So next time, I'm Joe Moss with Embassy National Bank, and boy, our mantra, hey, be careful out there, could not be any more true than it is today, talking about health care. So we will see you next time. Thank you.